Welcome back, everyone, to the ULTY portfolio update. This is data as of end of the quarter. So September 30th has elapsed, and we are into the fourth quarter of 2025. This is an exciting time for ULTY. We've got 3 stocks to talk about, and we've got 1 options trade to go over. Correction, 2 options trades to go over. We'll review the OpenDoor trade, which is coming to a close at the end of this week. And we're also going to review the Figma trade, which was initiated on the 22nd of September, and we'll see how that is playing out. But starting with the overall markets, the NASDAQ was fairly muted, up only 0.27% today. It's still reaching that 600 level. I think our highest close seems to be 602 on Monday, September 22nd, and we're still reaching all-time highs. ULTY itself had a flat day. It had a high of about, according to Google, 549 and a low of 546, and ended the day at 547. So a fairly flat day for ULTY overall. There were 3 stocks to really talk about. ULTY did not sell any stocks today. They did not buy any stocks. 1 went up in particular, and that was CoreWeave. And let's spend just a moment looking at the news from CoreWeave, which was this, that they signed a $14.2 billion agreement to supply Meta with NVIDIA's latest GB300 systems. So my understanding of the CoreWeave business model is that they buy or lease basically NVIDIA GPUs, graphic processing units, and put that in the cloud, and then other businesses like Meta don't have to go out and buy the hardware. They just sign up with CoreWeave, and then they get access to what NVIDIA's GPUs can do through CoreWeave's cloud infrastructure. So this deal should be good for CoreWeave. If we take a look at CoreWeave on our overall tracker of profitability of the ULTY stocks, we see that CoreWeave in Q2, I'm going to hide a few cells here, or a few columns. CoreWeave, their Q2 revenue was $1.2 billion, but their Q2 income was minus $290 million for a negative 23% profit margin. I think this will probably change in Q3 depending on when this deal gets into action, because $14.2 billion is huge for CoreWeave, especially considering their market cap is just $67 billion, and their Q2 revenue was $1.2 billion. It will certainly help the Q3 revenue when that gets released later, and maybe turn this Q2 income into some positive income instead of negative or a loss. Also, the other stocks I wanted to cover were NewScale and Unity. Both of these stocks were downgraded. That's why they were down today. NewScale, the small modular reactor company, down 5.66% today. They were downgraded to an underperform by Bank of America, which carries a lot of weight in the markets. Bank of America is not just a small research shop there. They downgraded NewScale to underperform, and with a price objective reduced to $34. And I think NewScale closed yesterday at $38 a share. Unity Software was also downgraded, which gave it a minus 6.75% change today. This one was downgraded. Who downgraded? HSBC downgraded it. They raised they put it at a hold. It used to be a buy, so not a sell, but a difference that makes no difference is no difference. They have the price target at 40.80, which, looking at Unity, they last traded at 42.94. So basically, they don't have much optimism on Unity Software. So those are the 3 stocks that were in the ULTY portfolio in the news today. And we look at the AUM, $3.3 billion, slightly smaller AUM. There were some shares redeemed today. Stock gains, $42 million in stock gains. Stock losses, $46 million, for a net of minus $4 million. The difference between that and ULTY not changing in price could probably be accounted for in some of the options, trades, and premiums collected. So the total positions, we're still at 23, 9 winners on the day, 14 losers for a 39% win rate. Let's see what the average is, just out of curiosity. For the losers, the average was minus 3.2%, and for the winners, the average was 2.98%, so around 3%. If you remove CoreWeave, which had great news today, the average was only 1.89%. So CoreWeave made up a lot of that gain. It is 5.22% of the portfolio. Actually, let's also take a look at what are our largest holdings these days. Robinhood Markets, Palantir, Rocket Lab, CoreWeave, HIMS, Coin, and the smallest holdings, Upstart, Affirm, and Figma. Okay, and just circling back to yesterday's episode, I had thought Rocket Lab, which is here, was going to take off more today based on the positive news about their 21 mission deal. They were only up 1.91% today. Maybe some of the news of the potential government shutdown, tempered the excitement for Rocket Lab. Who knows? And then I had thought that ULTY would be selling more Upstart today as well. They did not. They did not sell any Upstart today. Upstart was still down 3.68%. Maybe ULTY will sell more Upstart for the rest of the week, but it just seems interesting that they'd sell pretty much over half their Upstart position. But as I pointed out in another video, they were almost 2.8% of the company, so maybe they weren't comfortable taking on that. Anyways, let's take a look at the OpenDoor trades, and the yieldmax folks didn't put any new trades on the table. The ones you see highlighted in yellow here are still the only active trades. They all expire on Friday, October 3rd. We have a covered call where we collected some premium. They bought some puts and they sold a put at $7. So right now the stock's trading at $7.97. So not really in danger of that being exercised, but this stock does swing a lot. And then they also sold a covered call that at the $9 strike price, 60,000 shares, collected a 2.7 million premium. Doesn't seem like that's in danger of getting called away or assigned. And they bought a put at $8, so they protected their downside a little bit. So those are the trades that are still open today. Overall, they have a net credit of about $9 million, which is very good, but they have a $15 million paper loss on OpenDoor today, and the total net loss, when you add back in that credit, of down $11 million. So in order for this to turn profitable, I think OpenDoor is going to have to close. Let's see. Let's play around with the numbers. Not $8. OpenDoor might have to close. We'd need it at not $9. I think I can use GoalSeek here. That would be better. All right. Well, I wasn't able to use GoalSeek for this. I would have had to have installed it. But I can tell you that OpenDoor would have to close the week out at $9.37 for this trade to be profitable. At $9.36, they would be down $60,000. So $9.37 is the target number for OpenDoor. And if you take the current price of OpenDoor, let's find that, which is $7.97. I'll make that larger. Let's see how much OpenDoor would have to appreciate over the next few trading days. That would be, divide by that. So 17%. So OpenDoor needs to go up 17% for ULTY and yieldmax to make money on this trade or to not lose money. They could potentially do some more options, but they'd have to close out a few of these positions. So we will see. These aren't the current value of the options position, so maybe they've increased. We will keep an eye on that as we get closer to Friday. Now, the Figma trades. I wanted to go over the Figma trades because this is a rare opportunity to kind of look at options trades from the very beginning when ULTY bought them. So I have here two tables. One is the options trades, and the other are the stock trades. you can follow along here, which is going to be the credit that yieldmax is receiving from placing the options trades. And then you can also follow along here, which is the NAV change. We've got the current Figma price at 51.87. And then we've got the really important numbers, the P&L and the ROI down here. So let's start with the buys. So on September 22nd, ULTY purchased this much of Figma. And so that was 29 million and another 29 million for a sum of 59 million. So we will basically sum that up, and we're going to do this as we go. So the value of the position then was 59 million, and we will sum up the number of shares as well. So they bought 1 million shares. And on that day, they also placed these 4 options trades. We'll explain these in a moment. We'll put them here. Okay. And so what we have here is a covered call where they sold 5,000 contracts at $1.15, received 575,000. They also sold another 5,000 contracts at $61 strike price for $1.11 and received 555,000. And then they bought some downside protection at $54. These are puts, and those were the same amounts. So the net credit of that will be this. So we'll do a sum if, and we will search for that date there and sum it up here. So they opened the trade basically with a $665,000 credit. And then on the 23rd, they actually bought some more shares. So we're going to add these in. They bought 11 million more shares. So we'll add that in, and we'll get our sum to go there. So, and we have to add more shares. Okay. And this average price is just the value of the position divided by the shares there. So $70 million worth of Figma were bought, 1.2 million shares. On the 23rd, they also placed some more options trades. So let's add those in there. And we see that they sold another call at $61 for 90 cents and received $180,000 for that. And they bought a protective put at the $54 strike price. Again, this one for around 44 cents. So let's see what their net credit was there. So sum if, and this time, well, actually we can just use this formula here from earlier. So we used the formula from earlier. I just had to correct where the columns were referencing. So a $92,000 credit, and let's get a running total going, sum up that there. Okay. And so then they traded again on the 24th, a lot more trades, more options trades. And here they closed out a $61 call. You see the BC is they bought to close, and they closed out 12,000 positions there. So this was this, let's highlight it in yellow, the call expiring on the 26th of September for $61 and 12,000 shares. So we need to track that down. So it's these two here, which would be 10,000 shares. And this call here, yep. So this one at the bottom closed out these other ones, and they bought it back for 31 cents. And they would have made a profit there because everything they sold was above 31 cents there. So let's again see how much they made that day. So there it is, 1.6 million on that day. You can even, check it there. They sold a put, and they sold some more covered calls, this time at a lower strike price of $58. And that's why they bought back the previous ones. The previous ones were so cheap at 31, and they got $1.83 for there. So Figma's price is going down as this happens. They buy a protective put at $50. Remember, their entry price was $58. So they're trying to stop their losses. All right, then on the 29th of September, they do 2 more trades, okay? They sell another covered call at the $55 strike price, but they go out to October 3rd, and they do 6,000 contracts. They collect $408,000 for that. They buy to close the call from earlier. I'm going to highlight this one in, let's go light blue. And this one closes out this one here. It looks like, yeah, this one closes out half of that position, that contract there. So you see that's 12,000, but they only bought back $6,000. And remember, they sold it for $1.83. They're buying it back for 28 cents. So that's profitable there. Okay. So nothing happened on the 25th. Nothing happened on the 26th, the 27th, or the 28th. But on the 29th, they received some dollars there. 240,000 there. And finally, on September 30th, they placed 2 more trades. Here, another covered call sold at $54 strike price and for 55 cents, collecting $330,000. And they sold, so the 9:30 was a Tuesday. This is expiring on a Friday, so just a few days, you don't get as much premium. And they bought back another call there. I'm highlighting the same color. This one that I'm highlighting and this one, you guys can see. Hang on. Light blue and light blue. Those two close out that position, that one there. $1.83, and they bought it back cheap at 28 cents and 17 cents. So, oh, and let's get that there. So overall, it looks like they made about $2.8 million from options trading there. If we just look at the net credit and check our work, yep, 2.845 million. And the stock is trading right now at $51.87. Their average price has been $58.98. So the stock is down $8 million, but with the options premium, they cushion that blow at $5.6 million loss and then minus 8% ROI. So not great right now, but they can still manage the position. They might roll some of these over into next week. And of course, Figma could go up, and that would be very good for them. So that's the Figma options trade. It's not every day that we get to see kind of the ULTY trades in action from inception. So kind of cool to follow that. We may do another video on another one. But anyways, guys, that's all I have for you today. I hope you enjoyed the video, and a happy 4th quarter. Hope everyone enjoys the last few months of the year, and we'll keep making videos to round it all out. So thanks for watching. See you in the next one.